I am Pamela, and you are watching XRP News. Today, we are going to talk about one of the most pressing questions in the digital asset space. Which cryptocurrencies hold the potential for exponential growth as the market shows signs of maturation and renewed speculation? Ethereum, the world's second largest blockchain network, is currently holding a critical support level near $2,300. At the same time, a new wave of capital is flowing into early-stage pre-sales, a segment historically associated with high risk and equally high reward. Investors are searching for the next breakout stars, projects that could theoretically deliver 100-fold returns. But separating genuine innovation from fleeting hype requires a methodical, fact-based approach. In this broadcast, we will examine 4 specific cryptocurrencies that analysts and market participants are currently highlighting as having the potential for significant appreciation. We will analyze their fundamental use cases, recent developments, market positioning, and the inherent risks. We will also explore why Ethereum's stability at $2,300 serves as a crucial foundation for broader altcoin strength, and why presale tokens are once again attracting serious attention. Our goal is to provide you with a clear, balanced, and actionable overview. Nothing you are about to hear constitutes financial advice. The cryptocurrency market remains extraordinarily volatile, and past performance does not guarantee future results. However, by understanding the underlying technology, tokenomics, and community dynamics of these 4 projects, you will be better equipped to make your own informed decisions. Let us begin with a macro perspective on where the market stands today, then dive deep into each candidate, and finally conclude with strategic considerations for managing risk in the pursuit of high percentage gains. Before discussing individual tokens, it is essential to understand the broader environment. As of this recording, Ethereum is trading around the $2,300 level. This price point is not arbitrary. It represents a key technical support zone that has been tested multiple times over the past several months. Market technicians point to the confluence of the 200-week moving average and previous consolidation ranges near this area. Why does Ethereum's stability matter for the search of hundredfold opportunities? Historically, when Ethereum holds key support levels and shows signs of accumulation, it creates a rising tide that lifts liquidity across the entire altcoin ecosystem. Many smaller cap projects, especially those built on Ethereum or compatible with the Ethereum virtual machine, tend to follow ETH's momentum with higher beta, meaning they move more dramatically in percentage terms. Furthermore, Ethereum's ongoing development, including its continued scaling roadmap via Layer 2 solutions like Arbitrum, Optimism, and ZK Sync, provides a foundation for new projects to launch with lower fees and faster transaction times. This technological backdrop directly enables the presale environment we are witnessing. Speaking of presales, the term refers to early-stage token sales that occur before a cryptocurrency is listed on public exchanges. Participants in presales typically acquire tokens at the lowest possible price, often with lockup periods or vesting schedules. In return for taking on the highest level of risk, including the possibility of complete loss, investors gain exposure to potential exponential returns if the project succeeds. Recently, presales have gained renewed attention for several reasons. First, the overall market has recovered from the lows of the previous bear cycle, restoring risk appetite. Second, several high-profile presales from 2023 and 2024 have delivered substantial returns upon exchange listing, creating a fear of missing out dynamic. Third, new launchpads and token launch platforms have improved transparency and due diligence standards, although risks remain very high. With that context, we can now examine 4 specific cryptocurrencies that are frequently cited by market analysts as having theoretical 100 times potential. We will present them in order from relatively more established to earliest stage, acknowledging that risk increases along that spectrum. Our first candidate is not a single token, but rather a category of projects that have demonstrated genuine utility and are currently trading at a fraction of their all-time highs. Within this category, one name stands out: a cross-chain interoperability protocol that has already processed billions of dollars in transaction volume. Specifically, we are looking at Layer 0's native token, ZRO, as a representative example of the kind of infrastructure project that could multiply in value if the market continues to expand. Please note that while we use ZRO for illustration, the principles apply to similar high-quality infrastructure plays. Layer 0 is a messaging protocol that allows different blockchains to communicate directly without relying on centralized bridges. This solves a fundamental problem in the crypto space: fragmentation. Currently, assets and data are siloed across networks like Ethereum, Solana, Binance Smart Chain, and Avalanche. Layer 0 enables decentralized applications to operate seamlessly across multiple chains. As of the latest data, Layer 0 has facilitated over 50 million cross-chain messages and secured more than $20 billion in total value locked at various points. The protocol is integrated with major decentralized finance platforms such as Uniswap, PancakeSwap, and SushiSwap. Furthermore, it has attracted backing from prominent venture capital firms including Andreessen Horowitz, Sequoia Capital, and Binance Labs. Why does ZRO have theoretical hundredfold potential? Currently, the token's fully diluted valuation is several billion dollars. A hundredfold increase would imply a market capitalization of hundreds of billions, which is not impossible but would require the protocol to become a fundamental layer of the entire internet of blockchains. For comparison, Ethereum's peak market cap exceeded $500 billion. Layer 0's potential lies in becoming the standard for cross-chain communication, similar to what TCP/IP did for the traditional internet. However, several risks must be acknowledged. The interoperability space is highly competitive, with rivals like Wormhole, Chainlink CCIP, and Axelar also vying for dominance. Additionally, regulatory uncertainty around cross-chain messaging could impact adoption. And like all crypto assets, ZRO is subject to extreme volatility. For investors seeking hundredfold returns, the realistic path for ZRO involves continued adoption by major dApps, expansion into new chains, and a reduction in token inflation through fee mechanisms. The project's team has also hinted at staking rewards and governance features that could increase demand for the token. In summary, infrastructure projects with proven usage and strong backers offer a balance between risk and potential reward. While a hundredfold return from current levels may be optimistic, a 10 to 20-fold increase over a multi-year bull market is within the realm of historical precedent. The second category generating enormous interest is the intersection of artificial intelligence and blockchain technology. Among the many projects in this space, one has emerged as a leader: Render Network, RNDR, now migrating to Render. While Render is not a new project, its pivot toward AI-related compute markets has renewed its growth trajectory. Render Network provides decentralized GPU computing power for rendering 3D graphics, visual effects, and increasingly, AI model training and inference. Node operators contribute their idle GPU capacity and receive Render tokens in return. Content creators pay Render to access this distributed compute network. The explosive growth of AI applications has created a massive shortage of high-performance GPUs. Major tech companies are struggling to secure enough chips from manufacturers like NVIDIA. Render's decentralized solution offers an alternative, tapping into the global pool of consumer and professional GPUs. This use case is not speculative. It is already operational and generating real revenue. As of the most recent data, Render Network has processed over 30 million frames of rendered content and boasts thousands of active nodes. The project has partnered with major players in the film, gaming, and AI industries, including Apple's use of Render for certain creative applications, though that relationship remains partially unconfirmed. Why does Render have hundredfold potential? The global GPU computing market is projected to reach hundreds of billions of dollars annually within the next decade. If Render captures even a small fraction of that market, the token's value could multiply significantly. Moreover, the token supply is capped, and the network's burn and mint equilibrium model theoretically makes Render deflationary with high usage. However, competition is intensifying. Projects like Akash Network, IO.net, and Nosana are building similar decentralized compute platforms. Additionally, major cloud providers like Amazon Web Services and Microsoft Azure could launch competing services. Render's first-mover advantage and strong community are assets, but they do not guarantee long-term success. For an investor targeting 100-fold returns, Render requires a belief that decentralized physical infrastructure networks will outcompete centralized cloud providers for AI workloads. This is a debated thesis. What is not debated is the massive and growing demand for GPUs. Whether Render captures enough of that demand to deliver triple-digit multiples remains to be seen. The third area where hundredfold potential exists is in the gaming and metaverse sector, specifically focusing on projects that have not yet launched their mainnet tokens. One example currently generating substantial presale attention is Nexus Interactive, a hypothetical composite representing real projects like Illuvium, Heroes of Mavia, or Space Nation. Always verify actual details. Nexus Interactive is a blockchain-based multiplayer strategy game where players collect, trade, and battle with digital creatures. The project has raised over $5 million in its pre-sale rounds, with the token currently priced at a significant discount to its expected listing price. The development team includes veterans from major gaming studios, including Blizzard and Riot Games. What makes this category attractive for hundredfold seekers? Gaming tokens have historically delivered some of the highest returns in crypto, albeit with extreme volatility. Axie Infinity's Access token rose from pennies to over $150 during the 2021 bull run. The Sandbox's Sand and Decentraland's Mana similarly multiplied by hundreds of times. The key drivers for gaming tokens are user adoption, tokenomics design, and play-to-earn mechanics that create sustainable demand. Many pre-sale gaming projects now emphasize economic balance to avoid the inflationary death spirals that plagued early play-to-earn games. Features like token burning, sync mechanisms, and staking rewards are designed to maintain price stability while rewarding early participants. For Nexus Interactive specifically, the token's hundredfold potential hinges on several factors. Successful mainnet launch, listed on at least 3 major exchanges within the first month, achieving over 100,000 daily active users, and maintaining a healthy treasury for continued development. The current presale price offers a low entry point, but risk is proportionally high. Potential investors must scrutinize the team's track record, the game's beta test results, and the vesting schedule for team and investor tokens. Many presale tokens dump upon listing if early investors are free to sell immediately. Look for projects with lockup periods of 6 months or more. Additionally, be wary of projects that promise unrealistic returns or lack a playable demo. In summary, gaming presales offer asymmetric risk-reward profiles. A small allocation to a successful game can produce life-changing returns, but the vast majority of gaming projects fail to gain traction. Due diligence is not optional. It is essential. No discussion of hundredfold potential would be complete without addressing the controversial but undeniably powerful category of meme coins. While many dismiss them as pure speculation, a small number have evolved beyond jokes into legitimate ecosystems with utility. The fourth candidate is a new meme coin presale that is attempting to follow this path. Pepe Unchained, again a representative example based on real market trends. Pepe Unchained positions itself as a meme coin with a twist. It is building a Layer 2 blockchain specifically for meme coin trading and decentralized exchange aggregation. The presale has raised over $10 million in a matter of weeks, indicating strong retail interest. The token's branding draws on the popular Pepe the Frog meme, which has become a cultural touchstone in crypto. Why does a meme coin have hundredfold potential? History provides clear precedents. Dogecoin rose from fractions of a cent to over 70 cents. Shiba Inu turned a few $100s into millions for early buyers. More recently, Pepe, the original, achieved a market cap of over $1 billion within weeks of its launch. Meme coins tap into network effects, social virality, and what analysts call attention economics. Pepe Unchained attempts to differentiate itself by offering actual utility, a fast, low-cost blockchain for meme coin trading. If successful, it could capture transaction fees and provide staking rewards, creating a more sustainable economic model. The team has also announced plans for a decentralized launchpad for other meme coins, potentially making Pepe Unchained the hub of an entire sub-ecosystem. However, the risks are extreme. Meme coins are notoriously volatile and often experience rapid pump-and-dump cycles. The team behind Pepe Unchained is partially anonymous, which increases counterparty risk. Additionally, the pre-sale structure includes high allocations to marketing and development, but there is no guarantee of exchange listings or long-term liquidity. For an investor comfortable with high risk, a small position in such a presale, representing no more than 1 to 2% of a portfolio, could yield extraordinary returns if the project captures the cultural zeitgeist. The key is to enter early, take profits systematically, and be willing to lose the entire investment. It is also worth noting that regulatory scrutiny of meme coins is increasing. Securities regulators in multiple jurisdictions have questioned whether certain meme coins constitute unregistered securities. Pepe Unchained's utility features might help it avoid this classification, but legal uncertainty remains. Having examined 4 distinct categories of hundredfold potential cryptocurrencies, we must now address the most critical component of any investment strategy: risk management. The pursuit of hundredfold returns is inherently speculative. Statistically, the vast majority of projects that promise such gains will fail or underperform. Therefore, how you allocate capital matters more than which project you choose. First, consider position sizing. No more than 5 to 10% of your total cryptocurrency portfolio should be allocated to hundredfold speculations. The remainder should be in more established assets like Bitcoin, Ethereum, and top-tier altcoins with proven track records. This ensures that even if your speculative bets go to zero, your overall portfolio can recover. Second, diversify across categories. In this broadcast, we have covered infrastructure, Layer 0, AI compute, Render, gaming, Nexus Interactive, and meme coins, Pepe Unchained. These categories have different risk drivers and return profiles. A gaming token might succeed while AI tokens struggle, and vice versa. Spreading your speculative capital across multiple uncorrelated bets increases the odds of 1 or 2 hitting. Third, set clear exit strategies before entering any position. Hundredfold returns rarely happen in a straight line. Prices will fluctuate wildly. Determine in advance at what price you will take partial profits. For example, selling 20% of your position at 2 times, another 20% at 5 times, another 20% at 10 times, and letting the remainder ride for higher multiples. This locks in gains while maintaining upside exposure. Fourth, use stop losses and take profit orders where available. Many decentralized exchanges do not offer these features, but centralized exchanges do. Protect your downside. A drop of 50% is common in crypto. A drop of 90% is not unusual. Without risk controls, paper gains can evaporate overnight. Fifth, stay informed. The information environment in cryptocurrency changes rapidly. Follow development teams on social media, monitor on-chain metrics like active addresses and transaction counts, and watch for exchange listing announcements. If a project misses roadmap milestones or team members depart, reconsider your thesis promptly. Conversely, if ETH rallies toward $4,000 or higher, speculative appetite will increase dramatically. Monitor Bitcoin as well, as the 2 largest cryptocurrencies remain highly correlated. Seventh, be realistic about time horizons. Hundredfold returns typically require multiple years, not days or weeks. The presale tokens we discussed may have lockup periods. The infrastructure and AI projects may need time to onboard users and generate revenue. Patience is a competitive advantage in crypto investing. Overtrading and chasing short-term pumps are the fastest routes to losses. The renewed attention on presales deserves deeper analysis. Presales occur in several forms: initial DEX offerings, IDOs, initial exchange offerings, IEOs, and direct sales via project websites. Each has different mechanics, but all share the feature of providing early access at discounted prices. In the current market cycle, presales are gaining attention for 3 reasons. First, many retail investors missed the run-up in Bitcoin and Ethereum from the 2022 lows. Presales offer a perceived second chance to get in at the ground floor. Second, several successful presales from late 2023 and early 2024 have generated headlines. For example, projects like Celestia and SEI Network delivered substantial returns to presale participants. Third, the proliferation of launchpads like DAO Maker, Seedify, and GameFi has made presales more accessible to ordinary investors, not just venture capitalists. However, the presale space is rife with scams and failed projects. According to data from Chainalysis and other blockchain analytics firms, over 10% of presales show signs of malicious activity. including rug pulls where developers drain liquidity pools. Even legitimate projects can fail due to poor tokenomics, lack of product market fit, or simple competition. Therefore, before participating in any presale, perform the following due diligence steps. First, verify the team's identity and background. Anonymous teams are not automatically fraudulent, but they present higher risk. Second, read the white paper and tokenomics document. Look for realistic vesting schedules, reasonable token distribution, avoid projects where the team holds more than 20%, and clear use of funds. Third, check the project's social media engagement and community size. Artificial followers and bots are red flags. Fourth, review the smart contract code if you have technical ability or rely on reputable third-party audits. Firms like CertiK, Hacken, and Trail of Bits provide security assessments. Fifth, see if the project has a working product or at least a testnet. Projects with nothing but a website and a promise are far riskier than those with demonstrable progress. For investors who lack the time or expertise to conduct such due diligence, a safer approach is to wait for tokens to list on exchanges and establish a trading history. While this eliminates the 100-fold potential of presale entry, it also eliminates the risk of total loss from a failed or fraudulent sale. To provide a balanced perspective, we should consider what various market experts are saying about the pursuit of 100-fold returns. Not all analysts agree that such opportunities are abundant in the current market. Bloomberg Intelligence's senior commodity strategist Mike McGlone has cautioned that cryptocurrency markets are maturing and that the explosive returns seen in previous cycles may not repeat. According to McGlone, increased regulatory oversight, institutional participation, and macroeconomic headwinds, including high interest rates, could compress return expectations. A 100-fold return from a top 50 cryptocurrency may no longer be realistic. Such gains may be confined to micro-cap tokens with very low liquidity. On the other hand, analysts at Pantera Capital and Placeholder VC have argued that crypto is still early. They point to the internet's trajectory in the 1990s and early 2000s, where early-stage investments in companies like Amazon and Google delivered 100-fold returns even after the dot-com bubble burst. They contend that blockchain technology is still in its expansion phase and that the killer applications, especially in AI, gaming, and decentralized identity, have not yet fully emerged. A third perspective comes from on-chain data providers like Glassnode and Santiment. Their analysis indicates that retail interest, as measured by search trends and new wallet creation, remains well below the peaks of 2021. This suggests that we are not yet in a mania phase. Historically, the best 100-fold opportunities arise during manias, but also end badly for those who enter too late. The current environment of moderate interest may actually be a healthier time for long-term accumulation. Finally, some veteran traders advise ignoring 100-fold narratives entirely. They argue that focusing on such extreme returns leads to reckless behavior and inevitable losses. A more sustainable approach is to target 10-fold returns over a 3 to 5 year period, using position sizing and compounding to build wealth gradually. This strategy avoids the emotional roller coaster of 100-fold speculation while still capturing substantial upside. All of these views have merit. The responsible investor weighs each argument and makes a personal decision aligned with their risk tolerance, time horizon, and financial goals. We have covered substantial ground in this broadcast. Let us distill everything into actionable steps for you, the viewer, as you consider whether and how to pursue 100-fold opportunities in cryptocurrency. First, audit your current portfolio. If you are not already holding core positions in Bitcoin and Ethereum, prioritize those before any speculative bets. These are your foundation. Ethereum holding $12,300 is a signal of market health, but it is not a guarantee. Build your base first. Second, decide on your speculative allocation. A common rule of thumb among crypto fund managers is the 1% rule. Allocate no more than 1% of your net worth to any single 100-fold speculation, and no more than 5% total across all such bets. This ensures that a total loss is painful, but not catastrophic. Third, choose one of the 4 categories discussed that aligns with your interests and understanding. If you understand AI, focus on Render or similar projects. If you are a gamer, examine the gaming presales. If you prefer infrastructure, Layer Zero and its competitors deserve your attention. Do not invest in projects you cannot explain to a friend in 2 minutes. Fourth, conduct your own due diligence beyond this broadcast. Use resources like CoinMarketCap, CoinGecko, Dune Analytics, and DeFi Llama to verify market data. Join project Discord and Telegram channels to assess community health. Read the project's documentation thoroughly. This work cannot be outsourced. Fifth, start small. Even if a presale is open, you do not need to commit your full intended allocation at once. Dip a toe, see how the project performs over a few weeks, and add gradually if your confidence increases. This dollar-cost averaging approach reduces the risk of buying at a local peak. Sixth, secure your assets. For tokens that you acquire, move them from exchanges to a self-custody wallet such as Ledger, Trezor, or a reputable software wallet like MetaMask or Phantom. Do not leave significant amounts on exchanges, which can be hacked or frozen. Write down your seed phrase and store it in a secure offline location. Seventh, set calendar reminders to review your speculative positions monthly. Reevaluate the thesis. Has the team delivered on roadmap milestones? Has competition intensified? Has the broader market environment changed? Be willing to sell if the original reasons for investing no longer hold. Do not fall in love with a project. Remain objective. Eighth, manage your emotions. The journey to hundredfold returns will include periods where your investment is down 80%. It will also include periods where it is up 10 times. Both extremes trigger emotional responses that lead to poor decisions, selling in fear or failing to take profits due to greed. Stick to your predetermined exit strategy. Ninth, stay educated. The cryptocurrency space evolves rapidly. What works today may not work next year. Subscribe to multiple news sources, follow credible analysts, and continuously learn about blockchain technology, tokenomics, and market cycles. Knowledge is the ultimate hedge against risk. 10th, and finally, remember that you are watching XRP News. Our mission is to provide you with accurate, timely, and balanced information to help you navigate this volatile but potentially rewarding asset class. We do not pump tokens or guarantee returns. We empower you to make your own decisions with confidence. For XRP News, I am Pamela. Thank you for trusting us to bring you this comprehensive analysis. If you found value in this broadcast, please consider liking, sharing, and subscribing to ensure you never miss our future coverage of the cryptocurrency markets. As always, do your own research, never invest more than you can afford to lose, and stay rational in a market that often defies rationality. We will see you in the next broadcast. Until then, trade safely and think critically. Goodbye.